Global rating agency Moody's has downgraded Nigeria's local and foreign currency long-term issuer ratings, as well as its foreign currency senior unstructured debt ratings to B3 from B2, and placed them on review for downgrade. This comes after the agency's ratings committee reviewed their assessments of Nigeria's fiscal strength and the country's debt profile. One thing that Moody's pointed out was that the deterioration of Nigeria's finances exerted increasing pressure on the sovereign credit profile despite the strong increase in international crude oil prices in 2022. There could be further downgrades after this. Ayodeji Dawodu, Fixed Income Director, Central Europe, the Middle East and Africa at Banctrust & Co., joins me now to discuss how valid this decision is and its potential impact on Africa's largest economy. Ayodeji, welcome again to Business Edge. Thank you for joining me.
Thank you very much. Good morning.
So let's start with what Moody's pointed out, which was that Nigeria has been unable, unfortunately, to benefit from the higher oil prices we've seen this year due to what has been a 32% drop in oil production since the beginning of 2022. It seems that we might be beating a dead horse here, but just to have the clarity, why has Nigeria struggled to take advantage of what have been some increasingly or rather incredibly high figures for oil production this year?
One of two reasons, really. The first is we've had a sharp reduction in oil production. So although oil prices have been triple digits, our production has been suboptimal. And I say suboptimal because just prior to the recent OPEC quota that was reduced, Nigeria's quota was as high as about 1.775-ish million barrels per day. And since the start of the year, the country has really struggled to come anywhere near that quota. Since the start of the year, the production is down about 32-35%, and that's roughly about in about 100,000 or so barrels less than the OPEC quota. So it's really been underperforming on the production side. I think the second thing to also realize is that we have subsidy in place. So we've been subsidizing PMS at the tune of about, it's been as high as almost 400 naira per litre in terms of subsidy at different points in time this year. In terms of how much has been budgeted, I think about 4 trillion naira has been budgeted. But if you look at how government revenues has been computed, the subsidy is deducted from oil revenues. So really, oil revenues, again, that should be accruing to the government is being hindered by suboptimal production and then the subsidy bill that just keeps increasing, both in terms of the price as well as the volume. It seems as though there's some artificial consumption in some of the numbers that's been published. From what I understand, Nigeria's real consumption of PMS is probably closer to about 35-40 million liters per day. But what we're seeing in figures being published from the government is that consumption is this year in different months has been closer to 70 million liters per day. So that in itself has also ballooned the subsidy payments, and unfortunately, we are not benefiting from the higher oil prices.
Okay, so you've put all of these together into what is, I guess, right now a mix. So when you look at the validity of the decisions that Moody's made, do you agree with the fact that Nigeria should have been downgraded, particularly at this point in time? Does Nigeria deserve this downgrade from Moody's?
I would say Nigeria's position is very challenging. I think when you look at some of the factors that Moody's points to for its reason for the downgrade, it would seem valid. One is that it appears as though Nigeria, or should I say the government financing position appears to be constrained. And again, it goes back to some of the reasons I mentioned before. Oil revenues has really been constrained by production and the subsidy. And then when you take into effect the country's debt servicing payments, it becomes very clear just how worrisome the situation is. According to the budget, as at the first half of the year, the debt service to revenue ratio should be close to about 50%. What we have in actual fact, because of that sharp decline or the inability to meet budget oil revenues, some challenges on the non-oil side as well, but let's just look at the oil side. The government debt service to total revenue ratio is actually closer to about 105, as at 105%, pardon me, as at the second half of the year. So, that's one aspect that I would say, Moody is probably correct in its reasoning there. The second aspect is that the country's external position tends to be weakening. By that, if you look at the reserves are down about 8% since the start of the year. And that's really because, again, we are not able to take advantage of this oil price environment. Because the funds we're receiving in from oil production, oil prices, oil revenues as a result are also being partially offset, if not totally offset, which I believe may be the case in recent times, by the amount being paid to import PMS. We are not benefiting and seeing the accretion to reserve from the higher oil prices. And then also, because of difficulty and the decline in reserves, there is some demand management by the central bank as well in terms of trying to slow the potential depletion in reserves. Although it's down 8%, it could be down a lot worse if the CBN had not come in and tried to control some of the outflows. Again, with that external position, you look at the local currency.
Yes.
I think we're at the official rate. We're probably down about 5%. I think we're trading closer to about 440 naira per dollar. But I'm not sure how many transactions are consummated around that rate, minus maybe KTA and BTA, personal travel allowance and business allowance, to other transactions. I would say the rate in which more transactions are probably more being consummated in the economy is at the parallel rates, where we're seeing dollar trading as high as 760, if not 765.
Okay.
Dollar. That spread again is indicative that there is some pressures on the local currency as a result of weakness in the external position.
Okay, so when we put all of that together, I think the question, of course, that anybody would have is what exactly is the impact of this downgrade? For many Nigerians, Moody's is just this agency, this international player in the economic space that they hear about, but their decisions do carry weight and their decisions can influence certain things for Nigeria. So in real economic terms, what does this downgrade mean for Nigeria?
So I think it's first thing is bad news, right? You're looking at the international markets, and the international markets are unfortunately very volatile and bearish at the moment because of the Fed rate hikes, uncertainty around global growth, and then you also have Ukraine-Russia conflicts as well. So the international capital markets are already bearish. Now, when you then add in a rating downgrade, which the international community, and I think the domestic investment community look at as well, it compounds concerns issues that already been on markets and frontier markets like Nigeria. For Nigeria in particular, what it does is that it makes your cost of borrowing even more expensive. There's been a reaction in the international markets to the rating. We've seen yields on Nigeria's Euro bonds trend upward. To be honest, there's been an upward trend over the last few weeks because of some of the comments that came from the administration. Whether it was misinterpreted or not in the international markets, there's been some negative perception there. And I think this rating downgrade just probably made things a lot worse. I think if there was the ability to borrow, and by borrow I mean raise Euro bonds, which I don't think the country and a lot of countries will be looking at the moment on the continent, it would be a lot more pricey than if we didn't have the ratings downgrade. And then that also has ripple effects on some of the corporates as well, because it's very hard for a corporate in Nigeria to be rated above or completely delinked from the sovereign. So a lot of the banks, for example, their ratings are some way tied to the sovereign. So there's expectations that we may see some of the ratings for some of the banks being downgraded.
Okay.
Some of it may be justified, but unfortunately there's potential we may see some ratings downgrade for some of the banks as well.
So we'll get into that bank issue because some of Nigeria's largest banks are actually going to possibly find themselves in an interestingly precarious situation. But I want to come back to something you said in terms of how the downgrade will affect us, and that's around the borrowing costs. And so the country's borrowing costs from the international debt markets, we're going to see that struggle now, and it's going to become more expensive for Nigeria to raise borrowing money or to even borrow as it may be. But let's look at what happened recently, and that's President Muhammadu Buhari presenting a budget of 20.5 trillion naira, which has an anticipated deficit of 10.87 trillion naira. Now, the president had said that the country would borrow and also sell national assets to fund that borrowing, to fund the deficit. So in terms of this downgrade, particularly that comes from Moody's right now, how do you think that's going to affect Nigeria's plan to borrow? It's going to make it more expensive. It's going to make it harder. Will Nigeria be able to even borrow as much as it needs? What do you think?
So I think the first thing is it has to be the ability, the interest of investors to even lend to Nigeria, not the cost. I mean, what we've seen so far this year, it's been that the international markets have been very bearish and pretty much closed or averse to lending money to emerging markets and frontier markets. There's been a flight to safe havens and to hold cash because of the uncertainty. So I don't think there's been availability of funds for Nigeria to borrow this year. And as the Fed rate continues its rate hikes, and we're still seeing inflationary pressures in the global economy, there's question on how long the Fed will continue to and whether we'll see stability. We are of the view that rate hikes may go into the first quarter of next year, but then you would then need to see some stability. I mean, the Minister of Finance mentioned that Nigeria may be looking to tap capital markets in the second half of next year to support its budget deficit. But there's still question marks as to whether the international markets will be open to that. And then there's the cost thing. If you then look at the cost side of things, where the Fed rate may be and where international capital markets may be, it may not necessarily be affordable for Nigeria to borrow at those rates. If you look at Nigeria's Eurobonds now, they're trading at double digits. I think on average it's about 15%. Nigeria's Eurobonds are trading at substantially higher than the rates in which a lot of them were issued at. I mean, if you look at a lot of Nigeria's Eurobonds, they're close to about 7-8% at the high level. So which is almost half of what we are at the moment, and it wouldn't seem very feasible. I mean, local currency bonds are probably trading a little bit lower than where Eurobonds are trading at the moment.
Okay, so let's come back to that comment you made about how things might be playing out for Nigeria's banks. So in addition to this, we see that Moody's has also placed the deposit ratings of 9 of Nigeria's biggest banks on review for downgrade. This includes Access, Zenith, First Bank, UBA, GTB, Union Bank, Fidelity, FCMB, and Sterling Bank seem all to be on the chopping block. And as you said earlier, it's difficult to separate what's happening with Nigeria from the companies that are also, of course, operating within the country. So in terms of this situation, what's the situation with Nigeria's banks right now? What do you think that a downgrade for Nigeria means in context for them as well, and their operation and their ability to operate or to even conduct business outside of the country?
So I think the first thing to mention is that it's very difficult for a company, a corporate, and a bank to operate significantly above its macroeconomic environment. And some of the reasons that's been highlighted for Moody's in terms of why they're downgrading the sovereign also has implications for some of these banks. The FX challenges, for example, are affecting some of these banks and may affect some of their loan quality as well. So I think that's something to also bear in mind. The other side to bear in mind is the cost of borrowing for some of these banks, even though a lot of them have redeemed some of their Eurobonds, like we saw with UBA earlier this year, and we saw Fidelity a few weeks ago. There are still some that have Eurobonds trading, and there are still some that may be looking to secure financing off the capital markets in terms of maybe loans or short-term financing to meet the obligations. That's now going to be more expensive. Cost of funding may trend upwards as a result of that. I mean, they may either look to pass on some of this higher costing in terms of higher loan or may take significant stability. So, like you can see, it does have direct implications and indirect implications for some of the banks.
So one thing we need to point out is that Moody said that Nigeria could also get a further downgrade. We know that we've moved right now from B2 to B3. We have Moody's placing the country on review for further downgrades. And there is a potential that, well, let me put the question to you. Do you think there is a potential for Nigeria's rating to plummet into junk territory? What sort of things would need to come together? What are the factors that would need to be in play for us to see a further downgrade of Nigeria in the coming months?
Okay, so maybe I should touch on some of the good before I touch on some of the bad. Good things that Nigeria has in its favor is that it has a relatively low debt to GDP ratio. You know, it's currently at about 25% before adding the overdraft from CBN. If you add the overdraft from CBN, it rises to about 35, maybe 40% debt to GDP. That's lower than a lot of sub-Saharan African countries. I mean, it's lower than Angola. I think Angola is probably close to 60%. It's definitely lower than Ghana. So I wouldn't say that I would say that's a good thing for Nigeria. I think the main concern from Nigeria is that debt service to revenue ratio and its FX reserve. If you continue to see FX reserves continue to flat and continue to decline, I mean, we're at 38 billion, that's about. Yes, so the demand curve that's currently in place to kind of manage the reserve position, but particularly if you don't see an improvement in oil production, as we expect oil prices to decline over the next 6 to 12 months, It could really be a challenging position for the country. I think you should also add as well, elections coming up as well. We usually see fiscal slippages there as well, from overspending, from policy mismanagement, to put it politely. That can also come into play as well. And, you know, elections coming in February, there will be uncertainty in between that time, some uncertainty on policy direction shortly after that. So it's really, I would say it's challenging times for Nigeria, and there needs to be some action sooner rather than later.
All right, final question, Ayodeji, I'm going to put to you. As you said, of course, you mentioned earlier the subsidy conversation as well. Moody's has also said that if Nigeria does not reduce or remove its petrol subsidy, that it will end up consuming all of the country's oil earnings. But beyond that, Moody's is just one of the big three credit rating agencies, which also includes S&P and Fitch. If they were, in their own terms right now, to release their ratings for Nigeria, do you think we would see downgrades across board from the other two as well?
It would be difficult to say no, because these are quantitative factors that we can all see and not necessarily 100% based on subjective opinions and qualitative metrics. If I was a betting person, I would say the rest would probably follow suit, rather than, you know, are we all having different opinions, I would say. I think there's a likelihood we'll see the other rating agencies follow. I was surprised if I see an upgrade, for example, from any of the rating agencies. I think worst case would be some maybe retained, but I would skew to a downgrade if I was a betting person.
All right. A downgrade across board. Ayodeji, Dawodu, thank you so much. It's a conversation we'll continue to follow. Oil prices have been high. Nigeria is unable to take advantage. Now, oil production has declined, and it's become a very serious worrying issue for the country. Thank you for your time today.
Thank you very much for having me.
All right. It's one that we continue to watch out for. Africa's largest economy is struggling with its crude oil production, which means it's therefore struggling with revenue that is needed in this time. Interest rate hikes, imported inflation, of course, a struggle across the world have put a lot of pressure on not just Nigeria, but many African economies.